Good morning, it's May 13th, and this is To My Liberal Friends. Well, yesterday the tax bill finally was shown to the public, and immediately liberals went to their go-to comments claiming the bill was a gift to the wealthy and saying nothing for the middle class. Now, they know it's false, but they keep saying it, hoping you'll believe them. They keep saying this kind of stuff, and the liberal media repeats it over and over, hoping the public will not look behind the curtain and see that the wizard pulling all the levers is nothing more than a charlatan trying to hoodwink the public. The bill maintains all the tax cuts from the 2017 bill, and if they had not been extended, remember they expire at the end of this year, then taxes on everyone would have gone up. The tax cuts given to the middle class in that bill would have evaporated into thin air. There's still a lot of hurdles to overcome, but at least we know what's on the table for discussion. One of the major sticking points of the bill has been the $10,000 cap on state and local taxes. When this was instituted in 2017, Congress failed to index it for inflation, and those costs have risen significantly, particularly with the high years of inflation under Joe Biden, and they're now playing catch-up with taxpayers in many red states, and not just in the high-tax states like New Jersey, New York, California, Illinois, to name a few. Under the new bill, that deduction would rise to $30,000 for single and joint filers and would phase down as income grows. In other words, the very wealthy aren't going to get that break. This is much lower than the numbers being floated by members of Congress that view this as a key issue for their own reelection. In the negotiations just prior to the bill being formulated, they proposed that deduction be capped at $62,000 for single filers and $124,000 for joint filers. That's a pretty big deduction. This group of moderate Republicans have rejected the offer that's included in the bill. But being honest, this only benefits taxpayers that use a Schedule A to list deductions, and that is primarily high net worth filers. The second major issue within the bill was any cuts to Medicaid. The bill left out proposals that were controversial, including the idea that there be a cap on what the federal government spends on Medicaid expansion per enrollee. The bill only allows increases for medical inflation. Despite pressure from conservatives, the package also would not decrease the amount the federal government pays to cover the population of 20 million people who received Medicaid under broadened eligibility in the 2010 health care law. The federal government pays 90% of the cost for the 40 states that expanded Medicaid. Under the package, Medicaid recipients between the ages of 19 and 64 without dependents would be required to work, volunteer, or attend school for 80 hours a month. That's 20 hours a week. People who are pregnant, have disabilities, substance abuse disorders, are incarcerated, or other formerly foster youth, or ineligible through the Indian Health Service would be exempt from the requirement. In other words, just able-bodied people that could work. There's nothing wrong with that. The package would also require some people making more than 100% of the federal poverty level, about $16,000 a year for an individual, to pay for some of their coverage, capped at $35 per service, except for primary care, prenatal care, and emergency care. Cost sharing would not exceed 5% of individuals' income. That's like the copay that most of us pay when we go to the doctor. The package would require states to conduct eligibility checks for Medicaid every 6 months instead of every 12 months required by current law. This would also include a process to ensure deceased individuals are no longer enrolled in the coverage. It would reduce the federal government's share of Medicaid funding by 10% for states that cover undocumented immigrants in their programs. Look at California. There are billions and billions of dollars in debt because they extended this care. It would also delay until 2035 a Biden-era Medicaid rule that was intended to streamline enrollment and eligibility for beneficiaries. A Congressional Budget Office estimate last week suggested repealing that rule would decrease enrollment by 2.3 million people, increase the number of uninsured people by 600,000, and save $162 billion. It would also delay until 35 another Biden-era rule, which would make it easier for people to enroll in Medicare savings programs, which pay premiums and cost-sharing charges for some Medicare beneficiaries with low incomes. The package would also delay until 2035 a Biden rule setting minimum staffing levels in nursing homes. Another change that would have an impact is the tax credit for purchasing an EV. You can be sure you'll see dealers selling EVs immediately starting to advertise that you should buy your EV now because this tax credit goes away after this year. The proposed legislation tackles 3 of the main tax credits that buyers have used to lower the cost of switching to an EV. The first, a $7,500 tax credit for private buyers of new electric cars and trucks, and that will continue until the end of 2026 with some restrictions. Starting in January, the credit would only apply to vehicles from companies that have sold fewer than 200,000 battery-powered models. The second, a $4,000 tax credit for used EVs would no longer be available after this year. So much for all the people saying that Elon Musk would benefit from Trump administration and Republican-controlled Congress. That's going to hit his pocketbook. So when the committee starts debating the bill, they have to realize they have a slim majority in the House, and that can be problematic. Democrats will not give them one single vote in the House and will characterize the bill as benefiting the wealthy. They will ignore the increase in the standard deduction. They will not mention that seniors over the age of 65 get another increase of $4,000 in standard deduction if they fall below certain income levels. In summary, this bill extends all the middle-class tax cuts that have been in place for the past 10 years. It increases the standard deduction, which benefits the middle class. It increases the child tax credit, which benefits families, and it helps senior citizens. So when the Democrats start their usual false statements, call them out on them. It does not make deep cuts in Medicaid, but does tighten up some of the requirements and would force states to quit playing games with the funding. The bill's not perfect in my eyes, but it's a good start. And now we have to come out of committee, pass the House, then go to the Senate. More changes could be coming. In the end, they will have to get this bill done sometime by July. And I hope they do. This has been To My Liberal Friends. Thanks for listening.